every dollar then is, worth making $10 or $20 later on.
One of the richest people on the planet, Warren Buffett, didn't inherit his wealth. Rather, he worked hard to get it. Today, we'll explore how you might follow in his footsteps and become as wealthy as he was in 2024. He claims that up until the time he made his first investment at the age of 11, he was wasting his life. One of the greatest investors of all time, Warren Buffett, lived by this maxim. Warren is credited with saying, "The more you learn, the more you earn." This isn't just a clever saying. In the realm of finance, it really is true. Buffett's career started at a young age. At the age of 11, he purchased his first stock, and at the age of 13, he filed his first tax return, deducting the cost of his bicycle from his income. These early actions laid the groundwork for Buffett's eventual success. Fast forward to 2024, and the landscape of education and investing has changed, but the fundamentals have not changed. However, compound interest plays a significant role in this situation. The earlier you start investing, the more time your money has to grow. For instance, if you start investing at age 20 and assume an average annual return of 7%, you could have over $200,000 by the time you're 60. If you wait until age 30, you'll have about half that amount. All investors make mistakes. The secret is to take what you can from them and move on. As Buffett says, it's good to learn from your mistakes, but it's better to learn from other people's mistakes. This learning process is invaluable. Why is this relevant in 2024? Because the financial world is becoming more complex than ever. New investment vehicles like cryptocurrencies and NFTs are becoming more popular, and traditional markets are changing all the time. It will take effort to keep up with these developments. He said, "If you buy things you do not need soon, you will have to sell things you need." In a time when social media frequently influences our purchasing decisions and consumerism is rampant, being thrifty is a great way to improve your finances. The larger is better approach, which frequently results in excess, is another area where frugality can be applied. In 2024, Buffett is still residing in the same somewhat small home that he paid $31,500 for in 1958. Selecting a property that fulfills your requirements instead of going over budget for a fancy home will greatly enhance your financial health. Your finances may suffer if you spend a lot of money on things like eating out. Next on our journey to wealth, which begins with nothing in 2024, we'll examine the fundamental principle of working and saving, which Warren Buffett picked up early in life. Buffett's philosophy: do not save what is left after spending, but spend what is left after saving, emphasizes the value of putting savings ahead of spending in the gig economy of today. With more and more chances for earning money than ever before, it's critical to establish additional sources of income outside of your primary employment, whether through freelancing, part-time work, or a side business. Buffett began by distributing newspapers emphasizing the importance of working hard and earning every dollar. When you start earning money, the next step is to save carefully. It's not just about how much you make, but also how much you save in 2024. This goal could be a fixed amount or a percentage of your income, high-yield savings accounts, certificates of deposit, or even beginning with modest stock market investments. The power of compound interest is crucial in this situation, according to Buffett. "My wealth has come from a combination of living in America, some lucky genes, and compound interest. Your money has more time to develop the earlier and more regularly you save and invest." Here we are at the fourth crucial step in our 2024 plan to build wealth from nothing. Advice from Buffett. Never invest in a business you cannot understand. Highlights the significance of thoughtful and intelligent investment. This stage is about maximizing your financial resources and transforming your savings into an asset that appreciates in value. Learning the fundamentals of the stock market, bonds, mutual funds, exchange-traded funds, ETFs, and more recent investment possibilities like cryptocurrency is the first step in wise investing. These days, a lot of internet sites let you invest as little as $50 or $100. Starting small and learning from actual experience is crucial. Buffett's initial investments were not large, but they served as a foundation for his subsequent triumphs. This tactic involves distributing your investments throughout several asset classes and businesses rather than putting all of your eggs in one basket. For example, your bonds or real estate investments may still perform well to balance your portfolio if the stock market is down. Prioritize long-term investments over quick profits. Buffett invests in businesses with strong fundamentals, competent management, and the potential for long-term growth. Look for investments with long-term value in 2024 as opposed to following speculative or short-term market trends. Understanding your risk tolerance and making investments in line with it are also important aspects of venture risk management. Investing your dividends rather than cashing them out is a great way to build money. By reinvesting them, you can take advantage of compound interest's ability to grow your investments rapidly over time. A further component of wise investment in 2024 is staying abreast of developments in the global economy and technology. The world is changing quickly, and with it, opportunities for investments. For instance, sustainable and green investments are becoming more popular, offering not only financial returns, but also improving the environment. It's also important to understand the tax implications of your investments and look for tax-efficient options like 401(k)s or Roth IRAs. To summarize, wise investing in 2024 needs a combination of education, diversification, long-term planning, risk management, and staying up to date on global trends. You too can make your funds grow into an asset by adhering to these guidelines, just like Warren Buffett did. This strategy is crucial since it makes your money increase significantly over time. This compounding effect can result in a large growth in your assets. For instance, if you invest $1,000 and receive a 10% return, you will have $1,100. If you reinvest that $100, you are now earning returns on $1,100, not just your initial $1,000. Reinvesting gains can take many different shapes in 2024 when there will be a wide variety of investment possibilities. It could be as easy as reinvesting bond interest or stock dividends, or it could involve leveraging the profits from one investment to finance another, diversifying your portfolio and spreading risk. While starting with nothing in 2024 may seem overwhelming, Warren Buffett's journey demonstrates that with the correct strategy, it is completely possible to accumulate substantial wealth. On your journey to financial success, which of these actions will you take first?